Hi everyone. I realized that last video I recorded without microphone and the sound is not that perfect, but the concept I'm trying to explain, not the concept actually, the the posting I'm trying to explain is very important, and that's where I done the mistake a lot of times. So I'd like to do another video just to re-emphasize that this is important and at the same time it's simple. Okay, and I will flag where I did the mistake. What was confusing to me? So let's go. We have this forward contract for euro in exchange for United States dollars expiring or maturing in the middle of March 2026. Let's assume that we bought that contract 1 year ago. It's not that important for that case, just for the sake of completeness. So we bought it 1 year ago, 1 year lapsed, and now it's the middle of the March. And all-in rate, according to the terms of the contract, is 1.2. All-in rate is what we agreed the rate to be at the maturity date. And now it's maturity date. Okay. Now, what we see at the market in the middle of the month, and we do the reporting for the March. Assume we have monthly reporting package. Okay, we have some sort of spot rate, spot, and that's interesting and difficult question. What the spot rate is? I will give you a couple of examples for you to understand. So spot 1, Google. You go to Google Finance and you see some sort of the spot rate. Yeah. Okay. 1.15, does it work? Then you have your system, accounting system, spot 2, accounting. $1.16 at the same day. And we have spot 3, broker. $1.15.5. What should you choose? That's a good one. Yeah, you choose an accounting rate. What do you choose it for? And this is for March 15. You also have the rate at the end of the month, and it's also different. And you also have the average rate. Let's put it here, like spot average, spot 4 average accounting, 1.17. Why not? It's also possible. It's also possible to be like that, and this is for March. Okay, clear enough. Let's move on. What is done automatically in our accounting system? They're speaking about posting here, and it is dedicated to the accounting posting. So let's discuss what is done automatically. Let's say system. System does the following for you. At the middle of the month, in substance, you're receiving 1 million euro and you're paying 1,200,000 United States dollars. So it's debit, 1 million euro, and it's credit, 1.2 million USD. This is done at the middle of the month. What rate is used by the system here? And it's pretty obvious. It's from there. It's 1.16. It converts it by the rate of 1.16. What does it mean for us? It means that here is going to be 1,160,000. Where the difference goes? Correct. It goes automatically to FX. So in FX, we will have debit 0.0, as I'm working in millions, US dollars. Okay, that's clear. This is automatic system postings. What you should do in addition, like manual, it might be manual at this point, later on you might automate it, but normally if you're not big hedge trader or forward trader, you're just normal company that does business and hedging for the sake of hedging, you should do it manually. You do manually additional entry, because your idea at the beginning 1 year ago, remember, it was 3.15.25. You discussed with Treasury Committee, with Hedging Committee, wherever the structure you have, that your operating expenses in March 2026 are gonna be 1,200,000. But your OPEX, current OPEX, is not. Remember, average rate, like that. So for that 1 million euro, your current OPEX, and sorry, it should go here. It's OPEX part, so it's automatically. Your current OPEX 1.17 million USD. But the exercise of hedging is to make it equal to what it was initially planned, and it was planned to be $1.2 million. So you manually adjusting OPEX. You do OPEX more expensive because that's what you planned. That's the soul of hedging. You are not measuring against today's condition. You're measuring against your plan, and your plan was 1.2. So you should add here 0.0 USD, and you do it with correspondence. So this is debit. Sorry, colleagues, I know debit should go here, but it goes there because I haven't planned properly the space at the board. And you're minusing credit. What line you are minusing? Correct, FX. Why do you do this? You do this to make this line equals 1.2 million USD. This is the main message here. This is what you should take care of. What mistake I've made? I've used incorrect rate to make this posting. Because there are great spectrum of rates here, and this is just only a sample of them. There are many more rates existing for you, and you are kind of drawing in that amount of rates and information. And I've used a couple of times incorrectly to make this posting. And I've done that because I wasn't aware of the full picture. And the full picture is what the system does before I do that manual entry. Then I was junior enough. I thought that essence of my work is to do this magic entry. And when you do it separately without looking at all of these, you're stuck thinking, what rate should I use? What rate should I use? Here. Obviously, you're multiplying these for some sort of rate, the difference between this and this rate. But when you understand, then you decompose for yourself what happened at the system level. It becomes clear and transparent what exactly you should do manually to make your OPEX as it was initially planned. Final thought, just to summarize. Look at OPEX. OPEX. For that particular example, it was OPEX that was hedged at the beginning, and that's what you should aim to get in your books. Your OPEX to be equal what was planned. $1.2 million USD. This multiplied by that. And you adjust FX because it was automatically done by system into FX. I hope it really helps someone. Thank you. See you soon.